All right, we are live. Guys, I'm here with my colleague and good friend, Ryan Patient, and we want to kind of go over some important things about interest rates and the reason why you give a shit about interest rates or why interest rates are important is one, if you're trying to buy a car, a house, if you're trying to invest in your business, it's very important to understand how money works, right? How money, what the government can do going into this economy and what's that, how does that impact you? How does it impact your business? So that's kind of what we're going to go over right now. All right. So, first off, Brian, introduce yourself, give us a little bit of background, and then we'll get into this.
Hey guys, my name is Ryan Patient. I've been working with simple interest term loans for a little over 6 years now. Something I've been helping a lot of our clients do. We consolidate debt, business startup. I mean, there's pretty much you could if you think of it for money, like this thing will help you out. So I've been doing that for a while, and the good thing is that rates were crazy low for a long time, right? I'm
And
obviously,
historically, they're still low.
yeah. Well, yeah, that's something that a lot of people don't understand. Like, I'll be making the numbers up, but like in the '70s, I know mortgage rates were in the teens, right?
Yeah.
So like it's pretty interesting. But yeah, still historically they're low, but they were artificially lowered. I mean, you're really the expert on that, right? So
Yeah.
didn't the Fed kept it?
Yeah, I'm going to cover this stuff really quick to kind of catch you guys up to speed on what's going on. So, a couple things. Right now, the federal government is just raising interest rates, right? We talked about stagflation last week, but to give a little bit of a rundown, stagflation is when interest rates are going up. Not interest, I'm sorry. Stagflation is essentially when the economy is contracting, unemployment is going up, and inflation's going up. Okay, so basically we're stuck with, hey, what do you do? How do you combat this? Well, if you raise interest rates, you're tightening the money supply, which hurts the economy, but it's fighting inflation. Or you basically lower the interest rates, which makes inflation take off, but helps grow the economy. So right now, we're kind of between a rock and a hard place. And all I can tell you is that I see opportunity with how the economy is going to be growing over the next couple, let's say 6, 12, 24 months. And part of that is, hey, rates I think are going to continuously go up. And what does that mean? It means when if you go to purchase a car, it's going to be more expensive. If you buy a house, it's going to be a little bit more expensive in terms of, what the payment's going to be. All right. Um, And so having money on the sidelines, to invest or having access to cash is going to be very, very important. Also, if you can get access to cash, which is called fixed rate versus variable rate, that's a wise decision. Why is that a wise decision? Well, if you could borrow, let's say 6%, 7%, 8% now, like simple interest, like what Brian does, and rates continuously go up, you're kind of getting a discount now. You have capital that's in line or cheaper than where the market sees it, right? If you think about it like this, if you were to get, and everyone has been hitting us up about these quick SBA loans, right? For under 150, get it done in 14 days. That's still a variable rate loan, which that means is prime plus 275. All that means to you is you're probably borrowing around 6 or 7% over 10 years. And as the interest rates go up, that's going to slowly creep up as well. Versus what Ryan does. Ryan, talk a little bit about what you do.
So again, simple interest term loans, right? These are fixed interest rate loans. And what that means is that you're locked in. The banks, they can never raise them up on you. The terms, I mean, usually are going to be anywhere between like 24 to 84 months. The good thing is, it's as far as like borrowing amount, very similar to this SBA program that Jonathan is talking about. We've seen, clients get approved for 100 to 150,000. Now, you know, again, the big difference is you're locked into these rates and it is going to be a fixed payment. and it's going to be a little bit shorter term. So, like with the SBA, what's the term on that one?
10
That
years.
100. Yeah. So, I mean, really, at the end of the day, it just depends on how fast you want to pay it off, right? And with
And
with our loans, good.
yeah, like I was gonna say, they're both really great options, and I would actually do both. The reason being is if you are attacking into these times, right? Maybe you're consolidating credit card debt, okay, at higher rates. Maybe you're investing either in yourself or in your business or starting a business. These are all things that to think about doing because most people in these times are playing defense. You kind of want to play offense and go against the grain because
Um,
in the end, everything will go back to normal, right? And you'll have all the work that you put in and what you're trying to build. You'll be light years ahead of where everybody else is.
Yeah, I mean, and to your point, what we could do is, like say take the SBA, right? Use that, lock up all the, consolidate all the credit, whatever, with the business, and then use like the term loan to actually accelerate, anything else that you need to do on that side. So yeah, you could definitely do both for sure.
Yeah,
So, and it's always good in these times to have, full war chest because you never know what's going to happen. So, and
100%.
yeah, and I think within the last 4 weeks, we saw it looked like kind of like a knee jerk reaction from some of our lenders. Actually like raising interest rates a little bit higher than normal, but we've starting to see them come down on those rates again, and really kind of loosen up and really starting to open up their purses. So it's definitely a positive spin. Even though rates are going up, the banks are still lending, which is basically what we're trying to say.
Of course. Well, they want to when the rates are going up because they're getting more on their money.
Yeah,
you know,
absolutely.
yeah, for sure. And I'll tell you guys. Go on, Ryan.
I was just saying they could just pass it off on, hey, the Fed's raising the rate. There's nothing we can do about it. So they're really just making more money.
Yeah. And like, I want you guys to think about certain benchmarks, right? This is important to understand. If you go get a mortgage right now, it's probably going to be high fives, low sixes. Okay. Which is historic. Like when you look over the context of time, like the last 100 years or 50 years, that's still pretty low. Okay. When you look at business financing is still historically low interest rates. Is it what we've dealt with the last 5 or 10 years? No. So we have a whole group of people that's all they've known, all they've grown up with. When you look at, you know, this over the course of, you know, 20 years, 30 years, 40 years, or 100 years, we're kind of getting back to that median. Okay. So what I would tell you is assets are still key. All right. You still want to do everything in your power to invest in yourself, grow your business. Okay. And then another thing that I want to touch on, and this is so important, focus on what you can control. Don't be somebody that worries about shit that is not in your, that you can't control because you can't control it. Hakuna Matata, motherfuckers. I mean, that's the truth, right? Because you'll drive yourself nuts. And the reason why I'm so passionate about this one thing is because this is something that it impacts me. So as much as I'm trying to help you guys that tune in, listening to this, I'm also saying it to myself, right? Because I'm someone that wants to make a giant impact and do all these things and build these businesses. But at the end of the day, you can only control so much. Ryan, what do you got for us, bud? Anything else? Or
I mean, no, it's everything's looking good. I mean, which is a great thing. So, like I said, you've been having really good success with those SBAs. We've been having really good success still with our simple interest term loans. So, just trying to help as many people out as we can.
but let's do it, guys. If you guys have any questions, reach out to us. We're very, very easy to get a hold of. Appreciate you guys, and yeah, see you guys tomorrow. Take care.